Hello and welcome to Homeowner Talk. My name is David Stone and I'm the president of Nevada Association Services. And this is my co-host, John Leach, who's a partner in the law firm of Leach, Johnson, Song, and Gruco. Each episode we will be here to talk to you about important homeowner topics. We, along with our guests, are here to provide you with useful information on various subjects.
We also want to encourage you to interact with us and our guests each episode, so please visit our website at homeownertalktv.com and send us your questions. We will try to answer as many of your questions as we can on the air and online.
Now, on this show, we're going to be talking about banking, and we'd like now to welcome Craig Huntington. Craig is president of Alliance Association Financial Services, which is a division of Bank of Nevada. Craig, thanks for being here again.
My pleasure. Nice to be back, David.
And Craig, please tell our viewers a little bit about Alliance Association Financial Services, the division of Bank of Nevada, and maybe how you got involved with it.
Well, John, I started with owning a management company for about 20 years in Southern California, and I sold it about 12 years ago and had this idea of starting a banking program specifically for homeowners associations and management companies. So I've ended up at Bank of Nevada and Alliance Association Financial Services. We coined that name for our division basically because we do it all over the country. We are local, we're local to Bank of Nevada and the people of Nevada, but our program is all through the country and states, probably all 50 states. We might do some business in all of them.
Craig, what are some of the trends that you see in homeowner association banking, and are there any impediments to maybe getting the boards to understand, and even homeowners to understand that this is a very important, viable option for them?
Well, that's a very good question, John. It's really important. Our industry is so different than most industries. Being nonprofit, for example, most bankers don't even know that a nonprofit homeowners association can get interest on their checking account. Well, I take that back. In January, they changed the rules, so anybody can get interest on their checking account, even businesses. But prior to that, homeowners associations, being nonprofit, could get interest on their checking. So when you come to a bank like ours that does specific banking for HOAs, we can do no fees. We do lockbox for them. We allow them to pay their assessments with a credit card. We can offer them things that a typical bank down the street can't offer them. And that's, again, because we do it on such a large scale. You can't be a bank and take care of 5 or 6 homeowners associations. We bank thousands of homeowners associations. A lot of times they're referred to us as the McDonald's of banks for homeowners associations. But that's all we do. We make one burger, we make it good, and we do it right, and we do it for thousands of HOAs.
And the services that you provide through Bank of Nevada would include everything from your operating accounts, reserve accounts, maybe even loans. They loan money to associations, all things? Or?
All those things. It starts mainly with the lockbox, where you take a typical management company today that has 100 homeowners associations, and let's say each one has 100 units. That's 10,000 payments a month. Well, they mail those payments to us, and we have machines that open up 6,000 envelopes an hour or take images of 6,000 checks and coupons an hour. So we can process those things very quickly and give that information to the management company, which allows the management company to spend more time at the association, not opening up envelopes. Then we do things like the reserve requirements. Bank of Nevada, a holding company, which is Western Alliance Bank Corp., owns 3 banks. So when you bank with us, you can actually bank at Torrey Pines Bank in California, Bank of Arizona, Alliance Bank of Arizona in Arizona, or Bank of Nevada here in Nevada. So Homeowners Association banking with us has $750,000 in FDIC insurance, which is extremely important for reserves. We always tell everybody they should have all their money FDIC insured. So those are the kind of things that we do, and there's no fees. There's no fees involved at all in our banking services. And this is a good thing for homeowners associations. It helps them save money, helps them increase their interest income, because that's a tough thing. Everybody's looking for that extra buck nowadays, and those are some of the things that we do.
How do you deal with associations that have a large sum that they need to invest, perhaps even short term, maybe 6 months or a year? They got a construction defect settlement, for example, and they have a huge chunk of money. What can you offer to them as an example, to make sure that it's properly protected and that it gets a reasonable rate of return?
Well,
'Cause that's where they would really come to you, since you have that. That's what you deal with them
all the time, David, and we specialize in that, especially in Nevada. A lot of construction defect cases in Nevada. And for example, just last week, someone walked in with $12 million. And what do we do with this? Well, we have a specialty program where we sit down with the homeowners association, with the management company, and with the contractor, and we say, okay, how long is this project going to take? Is it going to be 1 year, 2 years, 3 years? What kind of draws are you going to need on the money? So then we structure the deposits in such a way that they maximize their interest, but have enough money to pay the contractor as the term comes up. The first $750,000 we can put right in our banks, and then the rest we'll typically put into CDARS or something like that, which is a program that can insure all the money in CDs. Now, we work with management companies and homeowner associations all the time with these large needs for what we call hot money. It's going to be here for 18 months and then we're going to spend it. But we still want to maximize the association's interest and income on that hot money.
And what do you do? Common now is electronic security fraud, banking fraud, people tapping into accounts that they probably shouldn't be. That's got to be of great concern. How are you addressing that nowadays?
Well, the banking fraud's a real big important thing now, and we have downloads right on our own computers. When people come onto our website from the management companies, they can actually click on something and download security right onto their own computer. So that allows the management companies to keep updated security software on their computers at all times. We're very much concerned about that kind of fraud, and we watch it very, very closely. Another thing that we do, because our unit is very unique in our bank. When you deal with Alliance Association Financial Services, you deal with my team and my team only. Every call we get is from a management company. The last call was from, or a homeowners association, was from a management company. The next call will be from a management company, a homeowners association. We don't deal with the restaurant or the car dealership or the law firm, for that matter, that wants it. That bank in Nevada will do, but my division only does that. So we watch transactions very closely. We watch what we call significant balance changes every day. Has an association all of a sudden moved a lot of money? Why? And we don't let anybody do wires, for example, outside of the bank. Most banks, you can come on electronically and type in, I want to move $500,000 to somewhere else. And all you need to do is sign on and put in a couple passwords. We do not allow our customers to do that. We do it the old-fashioned way. They have to fax us something. We have to verify the signatures. Then we call them back on the phone and say, did you want to do this? A little more time-consuming, but we care a lot about our
safety. It's worth the extra time. You know, a lot of associations find themselves at times needing revenue or funds to be able to make capital improvements, repairs, the major repairs. There are times that they have sufficient funds, but often they don't. They really only have two options. They have to go to their homeowners either way, but you can either do some kind of an assessment, reserve assessment, special assessment, which usually asks the homeowner to come up with a lot of money up front, or you can even borrow money from the bank, and then you're going to have to pay it back, but at least you can pay that back over a period of time, which is usually a little less burdensome on the homeowner. Any comments on maybe the opportunities to borrow money from the bank?
Yes, again, you want to go to a HOA-specific bank because a typical banker doesn't know how to make a loan to a homeowners association. When a bank makes a loan to somebody, they look for a secondary source of income. They can either take your car or you can pay them the payments on the car. Or they look for a secondary a guarantor. So if your business borrows money, you have to guarantee personally that the business. Homeowners associations don't have that. So we have programs to do that, and it works very well. They're good interest rates. Our interest rates now are 5.5% to 6% for loans. And it's great for an association to do that as opposed to a $10,000 or $15,000 special assessment. I do caution HOAs, though. The thing we look at first and foremost is their delinquency. They have to have a delinquency under 10%, and that's where David and his company come in line. That's a must. You have to have a low delinquency. So if you're looking to borrow money, look at your delinquencies and make sure you have them in control.
So get that in line, and then you can look at it. You've made a comment once or twice. I really think we need to at least touch on this again, and that is, you know, when you go to, if you have a heart problem, you don't go to a podiatrist. You need to go to someone who does the work. And we always like to say in the industry, you know, you need to talk to an HOA attorney. But I think the point you made is your bank is set up specifically to address homeowner association needs. And there are other great banks out there, but they may not have the division, the expertise in this area. And I think you need to maybe elaborate just a second on
Well,
that.
John, I even have board members that are bankers, and I have a board member in Arizona that's the president of a bank in Arizona, and he told his board to bank with us.
Wow.
Because he said, when I put my fiduciary hat on for my homeowners association, I cannot do what Alliance can do for this. At my bank, I can't do that. What they can do for free. So bank with them. And it's things like being able to pay with a credit card. That helps people out in David's world. When homeowners get delinquent, they can pay their assessments with the credit card when they use our bank. Most banks, they can't do that.
Yeah, that's great. You know, Craig, it's amazing to me that you have time to be an author as well, because I know how busy you are and how much time you give to CAI and other organizations that you work with. But I don't know if you can get a look on this, but Craig just recently published a book, Risk, A Road Worth Traveling, which we highly recommend you get a chance to read. And maybe you can just tell our viewers just a bit about how this came about.
Well, this has nothing to do with banking or HOAs, John. This is about taking risks and risk and rewards, basically. It's about my life. I've done a lot of things in my life, started a lot of businesses, taken some risks that I had very little knowledge about, but I jumped in and did them and have become pretty successful. So the book's had some pretty good reviews, and I think it's a great read for those people that are trying to change their life and want to do something different and maybe become more successful in doing something else.
Well, most importantly, where can our viewers get
They can
the
get
book?
it at my website, my personal website, which is chuntington.com, or they can get it on Amazon, both in electronic and in paper form. It's Risk, A Road Worth Traveling. They put that in, or put Craig Huntington in.
Well, and
Wonderful.
as you know, and if you're on a board of directors, we always talk about risk reward. I think this would be the kind of read for you to understand how to serve on a board.
Absolutely. Well, Craig, thank you very much for joining us today, Craig. It's great to see you. When we come back, we'll be joined by a community manager who will share her thoughts on banking. We'll be right back.
So what's new?
It's the flashing yellow arrow.
Tell me more.
Say you're going to make a left turn. On the green arrow, you turn left. A yellow arrow means the signal is going to change to red. A red arrow means you stop. Next, you'll see a flashing yellow arrow. The flashing yellow arrow means you must yield to oncoming traffic and pedestrians. Any other questions?
I got what I need.
The new flashing yellow arrow signal will be installed gradually throughout the valley. For more information, visit rtcsnv.com.
Welcome back to Homeowner Talk, and we'd like to now welcome Kim Kallfelz, president of Kallfelz Team HOA Management, who will share her thoughts on banking and her work as a community manager. Kim, thanks for joining us.
Thank you so much for having me. It's really a pleasure.
So tell our viewers a little bit again about your background, about your company, and how you got started.
Well, I've been in Las Vegas for 20 years, moved from New Jersey. When I got here, I began working in real estate. I had been working in real estate in New Jersey. And then about 10 years in, I had been on a board, president for 8 years, was on a master association board and president for a year. So I really got a taste of what it was like being on a board and what you needed from a management company. So I decided that this could be a really good niche for me. You know, I had great business background, had worked in marketing and sales beforehand, and with all my real estate background, I knew a lot about the communities and about Las Vegas as a whole. So it just kind of evolved. So I came from a different place than most management companies come from.
Tell our viewers a little bit about the types of common interest communities that your company manages.
Well, currently our inventory includes mostly units, clients that have 100 to 500 units with all kinds of amenities, parks, clubhouses, pools, gates, tennis courts, the whole gamut of amenities. But that's where we are now. Townhouses, condos, and single-family homes.
Excellent. That covers it, doesn't it?
And I think I've been working with you since almost day one. I mean, it's been, I think, about 12 years now, so it's
Yes,
it's
we
nice
both
to-
started in 1999.
That's right, right.
As did Craig Huntington, who I met in '99 and got involved in banking with.
You know what, guys?
Walked up memory
You're
lane.
making me feel really old since I've been doing this for 14 years before you guys
Oh,
arrived, so
okay,
now
well.
I feel really guilty about this. But anyway,
Kim, it sort of brings up my question. What have you seen over the years? How have you seen things change on the management side since, say, 99 up to now? Anything stick out in your mind?
Well, the whole electronic field and internet and computers has, I think, helps us maximize everything that we're doing in management for HOAs. We couldn't possibly be as accurate as we are without them. just the way the whole banking system is. I mean, I met Craig Huntington, and I was so impressed with the fact that he had been in management before. So he knew exactly what I was looking for in a bank, that I needed lock boxes and auto debits. And I even have some board members who go online every day. They have a special password, so that's all security protected, but they can actually look at their accounts every day. Because, there's been so much media about fraud.
I think it's interesting that, Kim said, well, at first I was on a board, so I knew what I was looking for in a manager. And then, Craig, I was a manager, I knew what I needed in a bank. And so it's really interesting how their background, your experience helped take you to that next thing, or gave you the insights, what you really were looking for.
Right, and I think it made us top-notch management companies, bankers, whatever we're doing, because we're coming from a different place than an old-fashioned management company that's been around for 40 years, because we're not there. We're on the top edge of all electronic kinds of things that we can do with banking, with processing, stuff that we do in our office. It's wonderful. I mean,
you had touched on the issue of one of your board members going on and looking regularly at bank transactions. Craig also spoke about fraud. When you're dealing with boards and that is an issue for them naturally to be concerned about, do you usually bring Craig in, for example, or how do you address and it's not just fraud with the banks. I mean, it could be fraud with the community managers. I mean, you never know what's going on internally. How do you address those natural concerns that boards raise regarding that issue?
Well, I think education is the first thing. And, Craig has helped me out in the past several times. But I actually train my boards on the whole financial process. Here's exactly how it works. Because being transparent and being accurate is so, so important. I wouldn't want somebody to look at a financial statement. And the fact that I'm pretty good at accounting and have a decent background helps also. So we have all of these training sessions for the treasurers or for anybody on the board who wants to come. And I think training is an important aspect.
What's interesting, though, is that our legislature meets only once every 2 years, and legislation naturally drags behind technology. Technology changes so quickly that you're outdated 6 months or a year later, and oftentimes the laws that we have to deal with, they're outdated shortly after they're adopted. But you're finding that the technology is critical to your ability to serve your clients.
Right, and the accuracy is so important in banking and financials. I mean, you're trying to get the most money, the most interest for your HOA. You're trying to maximize the amount of dues that they get, late fees, collection of delinquent accounts. You want to keep your age receivables low so that they don't have a lot of money that's owed to them. And this keeps them to be a vibrant financial picture that you can't always have. So I'm really, the technicality of it all is so important, and being on top of it and getting advice and asking the bank what's next, what's new, what are we going to do now? I mean, the credit cards, the signing invoices online, and all of those things, seeing invoices. We have some really savvy board members. I'm really happy to say I do. And they can handle all that. And then again, we have board members that aren't, that are maybe senior citizens and not as internet accessible or savvy. And so we have to kind of, we do the whole banking around what their personalities are.
That's great.
One HOA may take a day to sign the checks and get it out. The other one might take a week, and then maybe somebody goes online and does it. So you have to know, because you want your bills to be paid timely. Yeah. We have fabulous vendors, and they all appreciate the fact that they know they're going to get paid in a really timely manner.
I'm not sure anything affects an association more than accurate financial records and the accounting, the banking data. And so I'm just wondering, maybe you could share with our viewers a little about your relationship with the bank, how you guys interact with one another to have not just accurate records, but this quick turnaround and things like that.
Well, number one, we don't do deposits the old way. We have scanners in our office, that scan the checks, and so the checks they're deposited right then and there. So if we have a few checks that linger around, we do still have people who send the checks to our office, but 90% of our checks are sent to the lockbox. Without the lockbox, without the coupon, without some of these fundamentals that we have set up for our HOAs, we need to use HOA banking. We need to have coupons. We need to have that. Also, email. I mean, we get an immediate response if we have a question. If we have a problem, it's resolved in a day or so. These are really important things, because when somebody calls me up or calls up my accounting and says, I left that check over at the clubhouse last week, but it hasn't, been posted to my account yet, we need to be able to find the issues. We have with Alliance, we have a 99% accuracy. I mean, it is, and this is going, I've worked with Craig for 11 years, so, I started out.
And that certainly, not only is it good for the books, it makes the management side of things that much more easy and efficient. So, Kim, thank you so much for being here. It's great to see you.
Thank you so much.
When I go to board meetings, one big issue heard over and over again is roads. We spoke to Jorge Cervantes. He is the Director of Public Works for the City of Las Vegas, about roads and resources for those who reside in common interest communities. Let's take a look.
I'm the Director of Public Works. The Public Works Department is responsible for overseeing the infrastructure in the city. That includes roadways, it includes drainage facilities, it includes city facilities such as fire stations, parks, community centers. We're in charge of overseeing the design, construction, operation, and maintenance of those facilities. The roads are owned either by the city if it's a public street, or they're owned by the HOA if it's a private street. So on public streets, the city is the one that maintains those roadways, that maintains the street lighting, the sidewalks, the pavement, everything under there. If it's a private street, the HOAs are responsible for maintaining the roadways, the street lighting, all the amenities that are part of the roadway. There's a couple of ways for a person to know whether a street is public or private. If it's a private road, a couple of things occur. Most of the private roads are in gated communities. So if it's a gated community, that right away tells you it's a private road. The city would not own or maintain anything besides behind a gated community. There are some private roads, though, that aren't in gated communities. And the way you distinguish those is the street name sign, instead of being green and white letters, it's brown with white letters. So that's the distinguishing factor. Some of the roads will even have, as you're coming in off the major street, a sign that says private streets in there to let the people know that they're private streets. But all streets are built by the developer. When a developer comes in and builds a subdivision, he's required to put in the infrastructure. That includes the streets. Sometimes they're required to build a park, or if not build a park, they pay a contribution toward the construction of the park, and then later the city comes back and builds the park based on those contributions. But the roadways themselves, the infrastructure, is the responsibility of the developer. Now, sometimes you have a homeowner that doesn't build the whole development, but they just own one parcel, and so they're just going to build their home in that parcel. They're responsible for building half of the street in front of their property. And so they would build a sidewalk, curve, gutter, street lights, and half of the pavement in front there. And then the parcel across the street would build the other half of the road whenever it develops. Most of the streets are built as subdivisions and not as individual homes. The way the city handles the request for speed humps is through our neighborhood traffic management program. That program spells out what the criteria is where speed humps are allowed or not allowed. Now, there's a difference between a speed hump and a speed bump. A speed bump is typically what you see when you go to a shopping center or a supermarket. They're kind of short and high. They really make you stop to almost a complete stop, and they kind of give you a jerky motion. What the city uses are speed humps. They're a little bit longer. They're about 14 feet in length. They go up about 3 inches, so going over them is more of a gradual feel. They're intended to slow cars down to the speed limit, which is 25 miles per hour on residential streets. So the intent is to slow cars down to 25, not to make them come to a complete stop. Now, these speed humps are allowed on residential streets that meet the criteria. The criteria requires a certain number of minimum vehicles per day passing through there. It requires other things such as it can't be an emergency response route for fire departments, for fire vehicles. And so based on that criteria, when a request comes in, the city will evaluate it, and if it meets the criteria, the city would install those speed humps, and they would maintain them also. Some of the concerns that we get sometimes from HOAs is the question about some of the drainage facilities. A lot of times when it rains and water gets clogged up on inlets, the question is who maintains the drainage facilities. On public streets, the city maintains them, or if it's in a private street, it's the responsibility of the homeowners. And so anything that has to do with drainage on private streets is maintained by the homeowners. If a homeowner has a concern about an issue in the street, whether it's a pothole or burned out light, they can call the city's public works department at 229-6272. They could also go to the city's website, and there's a link there that allows you to put in a request. It comes in through what's called our Hansen system, is how we monitor our citizens' request. And so they can actually go in and put the information as what the location is, what the problem is, and whether they want to be contacted back or not once the issue is resolved.
Jorge shared some great information. We will include some of the resources he mentioned on our website if you're interested. We're going to take a quick break right now. Stay with us. We'll be right back.
Up to 40% of businesses never recover after experiencing a major disaster. Make a plan at ready.gov/business.
What gets you moving?
Because when you get moving an hour a day,
You fuel your body.
And your mind. Get up and play an hour a day, Doc.
check out how to be a player at letsmove.gov.
Welcome back. Through HomeownerTalkTV.com, we asked our viewers to send in questions. And the question from Tim is, the board would like to put a monument that looks like a sundial at the entrance to our community. The board is in conflict over whether or not this would be a capital improvement. Our documents indicate we need 51% of the homeowner's approval for a capital improvement. Would the installation of a new sundial be considered a capital improvement? And John, I'm going to let you answer this question, but they may want to just consider wearing a watch, and they wouldn't have to worry about the sundial component.
Yeah.
Just an idea.
Yeah,
So.
I think you're right, David. The first thing is that you will find that it's almost, the term capital improvement is almost never defined in a governing document, CC&R, and you won't find that definition in NRS 116. So the first thing is it a capital improvement? And the answer is probably. It probably is a capital improvement because you're not talking about modifying or adding something or modifying an existing thing. You're not repairing, restoring, maintaining. It's a new component. It's not on the reserve study. It's new. So we generally err on the side if it's a new structure, a new item, then it's a capital improvement, just by generic definition. NRS 116 would generally say that an association board has the authority to modify the common areas without membership approval, subject to what the declaration says. And in the question that Tim asked, he said, well, our governing documents say that we need 51% of our homeowners to approve a capital improvement. So although the law might have said board has the authority to do it without membership approval, that's subject to the CC&R, and the CC&R says we need 51% of our homeowners to do that. So in that particular homeowners association, they are going to have to get 51% based upon what the CC&R says, assuming that's what it provides. But there's another thing that's also oftentimes overlooked, and that is if the sundial monument is also a structure or building. It's probably not a building, but could it be defined as a structure? And again, that's not defined in 116 or in your document. So if you just go to Webster's and look at a structure, this monument is probably a structure. And there is an NRS 116 provision that says that if you add a new structure or building, which is not on the original plats, then in addition to whatever approval you might have needed, you're going to need to get the approval of a majority of the homeowners who live within 500 feet of that structure, a sundial. So in addition to the overall 51%, this association is probably also going to have to get a majority of vote of the homeowners that are going to look at the sundial monument over the next several years and decide whether they want to vote in favor of it.
And I don't think sundial is defined in NRS 116 either.
It isn't, but it is used to time how fast I run, which is not very fast anymore, so
Gotcha.
A sundial does have some value these days.
Wonderful. Thanks for the clarification. Thank you very much. We encourage all of our viewers to ask more questions through our website.
We do want to thank our guests today, Craig Huntington of Alliance Association Financial Services, Kim Kallfelz, president of the Kallfelz Team HOA Management, and Jorge Cervantes of the City of Las Vegas Department of Public Works.
And that's all for this edition of Homeowner Talk. We'd like to thank all of our partners on the show, the Management Trust, Alliance Association Financial Services, Classic Landscapes, GetDocsNow.com, Western Risk Insurance, and Nevada Association Services. Now remember, you can always find important information about this program, and you can also drop us a line at HomeownerTalkTV.com. Thanks for joining us, and we'll see you next time right here on Homeowner Talk.